Okay, let's unpack this. Today, we're doing a deep dive into some, well, pretty fascinating shifts happening right now in financial assets. We're zeroing in on Bitcoin ETFs, exchange-traded funds. Our info comes from a great Cointelegraph article using fresh data from Value, plus our own market notes. So the mission here, break down what happened, why it actually matters to you, and, cut through the jargon. We want you to get the core insights fast. Ready.
All right, first up, the big headline. Spot Bitcoin ETFs. They just ended this really impressive 12-day run, 12 days of money flowing in nonstop.
Yeah, quite a streak.
And then boom, Monday hits, net outflow, $131.35 million. Now, put that $131 million against the $6.6 billion that came in during those 12 days before.
Right, that context is key. It really highlights the shift. And maybe we should quickly explain what a spot Bitcoin ETF actually is for anyone maybe less familiar.
Good idea, yeah. So essentially, it's an investment product. It lets you get exposure to Bitcoin's price changes. But you don't have to, buy and hold the actual Bitcoin yourself. Think of it like this. Here's an analogy. It's kind of like buying a share in a company whose whole business is just holding gold bars in a vault. You benefit if gold prices go up, but you don't need your own vault, right? You don't handle the gold.
Okay, so you get the price action without the headache of custody. Makes sense.
Exactly. And inflows, that's just money coming into these funds. Outflows is money leaving. Simple as that.
Got it. So this outflow happened Monday, but here's where it gets really interesting. The details from Value, it wasn't spread evenly. ARK Invests, ARKB, they saw the biggest hit, $77.46 million out.
Wow, yeah. That's a big chunk of the total outflow.
Then you had Grayscale's GBTC, $36.75 million out. Fidelity's FBTC, $12.75 million. Even Bitwise's BITB and VenX HODL saw smaller outflows, like $1.9 million and $2.5 million-ish.
So fairly widespread across several major funds.
There was one massive exception.
Ah, yes, BlackRock.
BlackRock's IBIT. It's the heavyweight champ, right? Net assets. Get this, $86.16 billion.
Incredible figure.
And on Monday, zero inflows. Zero outflows, just steady. What does that tell us? When the biggest one just sits tight.
Well, what's fascinating here is exactly that stability from IBIT. It's sheer size. I mean, it dwarfs these daily flows. It kind of signals this deep underlying institutional confidence, not easily rattled by one day's trading.
Like an anchor.
Sort of, yeah.
Yeah.
And zooming out, even with this one outflow day, the bigger picture for Bitcoin ETFs is still really strong. Cumulative net inflows since they launched. Still over $54.6 billion. That's huge.
$54 billion, wow.
And total net assets under management across all of them, $151.6 billion.
Okay.
Which, get this, represents about 6.5% of Bitcoin's entire market cap now held in these ETFs.
6.5%. That's significant penetration into the mainstream.
Absolutely. So that one day broke the streak, sure, but the overall trend still very much pointing towards integration and sustained interest.
Right. That cumulative number puts the $131 million outflow in perspective. So the immediate question is obvious. What does this mean? Is this like a warning sign, trouble ahead, or something else?
That's exactly the right question. And we need to look at why it might have happened. Vincent Liu from Kronos Research, he's quoted in the Cointelegraph piece. He points mainly to profit-taking near the highs.
Profit-taking.
And also measured institutional rebalancing to lock in gains. Let me use a metaphor here for profit-taking.
Okay, metaphors help.
Imagine you're a gardener, you've worked hard, your tomato plants are loaded with perfect, ripe tomatoes.
Nice visual.
Or are you going to leave them on the vine forever until they get mushy or fall off? No, right.
Right. You pick them when they're ready?
Exactly. You harvest them. You secure the results of your work when they're at their peak. Investors are doing the same thing. They see good gains, the price is high, so they harvest some profits, lock them in.
Ah, okay. So it's strategic, not necessarily fearful.
Precisely. Liu actually emphasizes that. He says, it's not panic, but positioning.
Positioning.
A natural pause after a strong upward run. He explicitly says it's not a sign of fear among large holders. He calls it a routine correction.
Routine correction. That sounds calmer, less alarming.
It implies calculated moves, smart portfolio management, the kind you expect from institutions. Optimize, don't just react.
Love the gardener metaphor. Harvesting the tomatoes makes perfect sense, especially, like you said, after that strong upward run. We need to remember that context. Just earlier in July, we saw those record inflows.
Unprecedented.
July 10th and 11th. First time ever, 2 days in a row with over $1 billion flowing in. each day.
$1.18 billion one day, $1.03 billion the next.
So yeah, after a surge like that, a bit of profit-taking, some harvesting,
Yeah.
it doesn't seem so strange, does it?
Not at all. Seems like a healthy market dynamic, actually.
Okay, now let's pivot slightly. Because while Bitcoin ETFs paused, something else was happening in the crypto ETF world, Ether ETFs.
Right, the Ethereum side of things?
They actually extended their inflow streak. Another $296.59 million flowed in on Monday.
A complete contrast to Bitcoin that day.
Yeah.
It's quite interesting.
Yeah, it's a fascinating divergence. And if we connect this to the bigger picture for Ether, the total net inflow into Ether ETFs is now $7.78 billion.
$7.78 billion, also very substantial.
Definitely showing strong, growing interest. And that inflow streak for Ether, it's now hit 12 days, too. And it included some massive days recently. Last Wednesday, a record $726.74 million in one day.
Wow. Largest since they launched.
Exactly. And Thursday was huge, too, over $600 million.
So the appetite for Ether products is clearly still surging.
It really is. It suggests maybe different dynamics at play, different investor focuses, perhaps related to Ethereum's tech or upcoming changes.
Okay, so let's bring this all together as we wrap up this deep dive. What does this mean for you listening in? Key takeaways. The Bitcoin ETF outflow. Experts are calling it mostly strategic profit-taking, rebalancing, not panic, especially after that huge run-up.
Right, more like active management. Meanwhile, Ether ETFs still seeing very strong inflows, even record-breaking ones. Investor interest there seems really high.
And this whole situation, it raises a really important question. How do these flows, both in and out, reflect crypto just maturing, becoming part of traditional finance? Think about it. Even outflows, what looks like a dip, can actually be a sign of a healthy, functioning market. It shows investors are managing portfolios actively, locking in gains, reallocating, just like they do with stocks or bonds.
So it's becoming more sophisticated.
Exactly. More liquid, more integrated, moving past just pure speculation. It shows these assets are being treated seriously by serious players.
Good point. It's a
Yeah.
sign of normalization, maybe. So here's a final thought for you to chew on. Given these huge cumulative inflows we still see, the massive total assets in both Bitcoin and Ether ETFs, what does this sustained presence in mainstream investing tell us about the future? The future perception, stability, and maybe the widespread adoption of Bitcoin and other major cryptos.
Definitely something to keep watching as this space evolves.
Absolutely. Well, if you found this deep dive valuable, and we hope you did, please do follow, like, and share the deep dive wherever you happen to get your content. It really helps. And hey, for more insights into crypto, you can follow What Bitcoin Taught Me. We're on Twitter, X, Noticer, Blue Sky, Threads, Instagram, Facebook, and LinkedIn. Lots of places. Thanks for joining us today.